Good morning, guys, and welcome to your market report for this Monday, November 19th, 2018. Now, let's get right into it, and let's get right into the markets. Start the charts right here, and we'll first start with cryptocurrencies. We're seeing that, Bitcoin has not been doing good over the last 24 hours or so. We're seeing Bitcoin down to 5071 at Bitstamp, just hanging above 5,000 bucks, and it's broken down through support when it broke down under 6,000, and we've went down $1,000 lower than that at this point. All of the altcoins are having problems as well. Let's shift over here to cryptocurrency market capitalizations and take a look. Now, you have to remember that this was a $750 billion industry not long ago, and it's been knocked down to a $169 billion industry. The market cap is $169 billion, from $750 billion to $169 billion. I'd say that's a significant chop. Bitcoin dominance at 53.3%, and we see the down on everything. I'll tell you my opinion on this right now. I think that most of the wind was let out of the sails. Most of the air was let out of the bubble when Bitcoin was at 6,500. Now it's getting significantly lower. And has anybody thought that there is a possibility that this thing could be getting a little bit overdone? In other words, that this bear market might be they might be overselling the whole thing and actually markets do overshoot, and so that's my opinion. I'm thinking it's starting to head toward, if it's not already in, being oversold, at this point. And so now let's take a look at silver price today. This is definitely a market that it's not down because of overselling. This market is down because of price manipulation. And it is down lower than it would be if it was oversold. Lower than low, this market here for silver. It's down 1 penny on the day, $14.39. And I mean, silver's just barely been keeping its head above the $13 range. The big question mark on this is how long can they continue with this manipulation, and how much lower can they manipulate it? The question we have to beg is, can they actually manipulate it down to $10 or break below $10? I mean, they've even been caught with their silver manipulation on a couple occasions now. Deutsche Bank blew the whistle on them, and I'll tell you, between these crooks, like Deutsche Bank blew the whistle on them, they must see Deutsche Bank kind of like a rat, and they might be waiting to get even with Deutsche Bank. Maybe they'll let Deutsche Bank go under, I don't know. I'm just speculating all the way on that. But at any rate, here we go, $14.39. And the price seems fairly stable, though, at this range on silver, right for this moment. I'll tell you, when silver finally does break free, and I mean I can't tell you when that would happen, but honest to God, one of these days it is going to break free, and I don't think in the not too distant future, because I'm not going to go into all the fundamentals on silver right now. Tremendous fundamentals, but there is a limited supply of silver in the earth, and it is needed for industry. And so, I mean, it's pretty much of a no-brainer at a certain point. I heard last night, I don't know how much truth there is to it, but I heard last night that in Mexico, which is one of the main suppliers of silver in the world, that they've only got about 5 years left in their mines. They're going to have them all dug out. I mean, you cut off the Mexican supply, I mean, what you got left? I mean, to supply industry. They're barely keeping up right now, they've just passed peak silver, and they're barely keeping up with industrial demand. Of course, now, if we do go into an economic period of economic malaise, perhaps it will take a little bit less silver in industry and stuff, because people won't be buying so many iPhones and stuff, and so many solar panels and all this other stuff that they buy. It's full of silver, and so, but still, even at that rate, the hoarders will probably increase tenfold from what they are right now, if there is a financial collapse that affects the dollar. Okay, let's move on, and let's get on to the stock prices and stuff like that. Here's crude oil. This is actually scary. Crude oil's just fallen off a cliff. I can't help but think it has something to do with the Khashoggi. I think his name was Khashoggi. Anyway, he was murdered, you know, and I think that's got something to do with these crude oil prices falling, but I'm not exactly sure. It just seems to me very unusual or very peculiar that crude oil prices were hanging in there up near $70, you know, and OPEC controls crude, and all of a sudden we get this big Khashoggi case coming in here with this Khashoggi murder in the embassy, and all of a sudden, bang, we get looking at crude oil prices, the bottom falling out of them. I mean, is that a coincidence, or has it got something to do with that, with the murder case? Well, there's just the thing. I just smell a rat here that's got something to do with that case. Now, let's take a look at bonds and rates. And this is probably this is the most important market of them all. Of course, now, you have to understand, these bond yields are staying down a little bit right now. The U.S. 10-year in particular is the one I really keep my eye on the most. It's at 3.08%, and it's well under that 3.25% I've been predicting, but it's starting to creep back up again. We've went through a little dip in these bond yields. I'm not exactly sure. I don't think that this is going to last that much longer, this dip. I'm not exactly sure how long it's going to take to get back up to 3.25%, but we're keeping our eye right on it. If we take a look at the charting, we can see this dip in much more detail. And if we take a look at the charting, we can see, let me see, I'll have to go back to about 5-year, I think, maybe, perhaps. Yeah, we can see it here. If we take a look at the very bottom in right here of where it started to turn and go up. Take a look at that very bottom, and then plot a line right up through here, looking at the bottoms. Right? We can see that right now we're just slightly above these other bottoms that occurred, right? If we take a look at plotting the bottoms in an upward fashion, let's basically draw a line upwards. We can see we're just slightly above the bottom. The bottom would probably be about 3%. Would probably be the bottom. Now we haven't went above that since going back to July of 2016, I guess. Yeah, July of 2016, which is quite a long time. We've had several bottoms. We've had a few bottoms put in here. We've had one here, another one here, another one here, another one here. All the way up we've had bottoms. But that none of them have exceeded that line of that rise that the markets, the bond yields are rising at. They're rising at a certain pace. See the pace here. And none of the bottoms we've put in have went too much below that pace that the bond yields are rising at. So they're gonna. It's more than likely that they're gonna continue. We're a little bit above it. It's about 3% right now, following that line up. But now, if you move that line off into the future, they're going to exceed that 3.25%, not too far into the future. Probably only a couple months, if that, into the future. So that's what's going on with the U.S. Treasuries. Let's go back to the Treasuries here just for a second. Take a look at all the way across the board. Hit back. What's happening here? Okay, here we go. On the on the Treasuries, what we're looking at is 2.36% on the 3-month, 2.82 on the 2-year. The U.S. 5-year is 2.89 and 3.08% on the U.S. 10-year and 3.33% on the U.S. 30-year. And they're all moving up today, but not substantially. Let's take a look now at the Dow Jones Industrial Average for this morning. And what we're actually seeing here is we're seeing it down 58 points. So it's not a substantial move. I don't expect any significant downward movements in the Dow Jones until that 10-year passes 3.25 again. In fact, it's probably going to have to get up to more like 3.5 before we're going to get some substantial moves downwards. But when we get that next substantial move downwards in the market, it's going to look just like the last two we've had. The last one in January, and this one here we just got through well, it started on the 10th to 3rd, you know, and of this a little bit more than a month ago there, and we were in it for the last month. We've been in it. We've had two of them so far, so the next one's going to appear just like another one of those. That's what it's going to look like to most investors. They're going to say, hey, you know, we're just having another little downturn in the market, another little correction or whatever. But it's not going to be. It's the next one's the big one. That's what I think anyway. So now let's take a look at the U.S. dollar index today, 96.34. The dollar is going to be wanted a lot. It's going to receive a lot of love when the markets first start to come down. Later, when the real fear enters into the markets, after we have maybe not fully played the crash out, but when the crash is mid-gear, at a certain point, it's going to get bad enough where actually all of these guys turn bearish. You know, even the perma-bulls. And at that particular point in time, fear is going to enter in. Tremendous fear is going to enter in all through the whole system. And when that happens, then we're going to see the dollar's going to keep up being strong, even when the fear enters in. But that's when they're going to start to turn to gold and silver, is when that real fear comes. Until then, they're going to remain a little bit bearish on gold and silver like they are now. And the dollar's going to be bullish. And so, but there is a certain point there after the Fed turns around their monetary policy. That's when the dollar goes bearish at that point. And it's going to be an unending bearish run on the dollar. So anyway, listen, thank you guys for listening. Like and subscribe, and we'll catch you on the next market report. Bye-bye, guys.